So this Friday we have the release of the PCE, and this is the Fed's preferred measure of inflation. It is expected to show a pickup on a yearly basis, and markets are currently discounting the September rate cut as we've been talking about, and even if this data point comes in hotter than expected, it would be very difficult for Powell to walk back from his Jackson Hole remarks now. I think that it will be really unprecedented from Powell to basically change his stance after opening doors. He still said that the Fed still data dependent, but after his remarks, it's mostly it's almost a certainty that a cut will come.
This is Converge,
a podcast from Convera.
Come with us as we shape the future of finance.
Welcome to Converge Market Update. We have reached the end of August. Hard to believe summer is fading away. I've got Kevin Ford with me in Toronto today. Good to have you back, Kevin. It's been an interesting week for sure in the markets. Can you let's briefly set the stage. Obviously, macro markets are digesting a bit of political drama, which is sort of the norm these days. There's been central banks signaling fresh inflation data to follow. And we're sort of watching what happens when politics, the Fed, and data collide all in the same week. Obviously, the reports of Trump firing Fed Governor Lisa Cook has been quite the news bit this week. Can you discuss the significance of that type of political interference in central bank independence? Because I know it really has no precedence. And then more specifically, Kevin, can you sort of focus on how foreign investors, especially those in the FX markets who might be listening, might react or are reacting to the perceptions of political pressure on the Fed like this?
Yeah, definitely, Alex. Thanks for having me back. I guess first some comments on what's transpired this week. It really feels surreal, to be honest, to even be talking about this level of direct interference in the Fed. And we've seen presidents threaten and criticize the Fed before, but even during his first term, Trump's rhetoric never escalated to this level. And this is a major move, and you have to look way back to find some sort of parallel in US history, maybe to Nixon in the 70s, but honestly, the more direct comparisons are with developing economies, sadly. I come from Latin America. I know that this level of government intervention is more commonplace. So you've seen it in places like Argentina, Venezuela, or even Turkey more recently, where the independence of the central bank is compromised. And the rule of law becomes questionable, the checks and balances, right? So this is, and the problem is that we've seen this escalating over the last few weeks. This is on top of the recent firing of the Bureau of Labor Statistics head. And that's a move that still lacks a little bit of clarity on whether it was due to the dispute over payrolls revisions or was something else entirely. Then you have all these threats against Powell and the nomination of Miran to replace Kugler, who resigned, and there's really not a lot of color or information about her resignation. So it's unfortunate that we have to focus on political noise. That there are moments in markets that we have to that we're just hanging on words from politicians or this political noise, and that's where we are right now. That when it starts to undermine the credibility of institutions in the U.S. and North America, it's of course a critical market topic, and I'm not sure if markets have fully grasped the immediate, let alone the long-term implications of this. So I don't think anyone really does. But what's truly impressive, and just going to what markets have been doing, is the market's resilience. There's really no volatility. The dollar was up and down a little bit, sold off during Asian market hours, but there's really no volatility, and it's the market is just showing that it's seemingly high tolerance for this level of discomfort. This just keeps increasing, I guess. But as of now, markets are just waiting on basically what will happen with macro data by the end of this week. We have a GDP uh, report in the US for the second quarter, and of course the personal consumer expenditure PCE, which is the Fed's preferred measure of inflation. That will definitely add volatility and add more color to the macro landscape.
Yeah, no doubt. And obviously, people were watching the Jackson Hole conference closely for Powell's reactions to the market, which were initially read as dovish, and then that, of course, sparked a little bit of a rally on Friday. But that enthusiasm had cooled sort of towards Sunday, and definitely Monday trading had sort of reset back to where it was. What really explains that quick fade of market reactions from, this general sentiment that everyone's hanging on Powell's every word, yet his words were dovish, but we kind of saw a bit of a retreat in enthusiasm there. What explains that in your view?
I guess that markets quickly have refocused on the inflation story. It seems that while the 25 basis points cut in September is now largely priced in, the outlook beyond that it is highly uncertain and remains entirely data dependent. So if it is as if markets were surprised ahead of the Jackson Hole speech by just Powell basically acknowledging the risks on the the labor market and job growth. And I think that by just doing that, he opened the door for another for the rate cut in September. And I think that these markets just came back to what they were already expecting. So I think that nothing really has changed. I think that it's just more of a, okay, let's see what the hard data is going to bring. But when you layer the political noise that we just discussed on top of all this, it makes it a clear read on the future even more difficult. So it's just really markets resilience, this level of low volatility, closer to 2025 lows, and we're getting closer to 3-year lows in volatility. So at least in equity markets, Dow Jones last week hit an all-time high. Sentiment soured a little bit on Monday, but seems that we're at least the equity markets are bouncing back again. And again, like, this is unprecedented what we're seeing from the U.S. administration. You have to add as well the U.S. administration buying a 10% stake on Intel. Definitely, this is also not. It's also unprecedented because what we've seen in the past from the U.S. government, but just acquiring private companies. We knew that it was done during high levels of uncertainty, crisis, recession, crisis, fears, of course, that happened during the GFC in 2007 and 8. And it is just not, it is not clear. I mean, it is really difficult to assess, to understand the long-term implications of all this, because of the lack of clarity that's surrounding all these decisions. But you have on the other side that markets are basically on their own uptrend, and FX markets fairly calm, but we'll see what will happen by the end of the week.
Yeah. And I mean, it did seem sort of like, Powell was dovish, but at the end of the day, nothing really new, as you said, and sort of the data was really presented. And I don't know. Should investors interpret this as a higher for longer regime holding firm, or is it just sort of positioning noise?
No, I think Powell just reiterated that um, there are risks to both of to risks on both sides of their dual mandate, and it's and as Powell mentioned, it's a challenging situation where they're at, and they've caught 100 basis points, and we've been on hold since basically throughout 2025. So it's not the same pivot as we were back in September, like around this time last year. And so definitely it is a different positioning because of I guess what Powell has reiterated is that the monetary policy is more accommodating right now, but still has some room to balance both of its mandates, and just they're just acknowledging the risks that have increased in terms of job creation that is in the U.S. has been on a standstill over the last few months, and I think that beyond September, that's where the big question is. Markets are not really sure if these 25 basis points that is most certainly coming in September will be accompanied by a dovish message by Powell. Would it be a hawkish cut? Will it be a dovish cut? That's I guess those are the questions that markets are not like asking right now, but with a little bit of just optimism, I guess, as you can see in the levels of low risks and valuation in equity markets.
Yeah, it makes sense. I'm interpreting that a dovish cut might look something like engineering or attempting to engineer a soft landing versus cutting as a result of fears of recession. Because obviously that type of cut framed that way would spark less fear in the markets in general. So obviously the other data, upcoming PCE data, core inflation stickiness, USD strength, FX volatility is picking up. There's more weight on the inflation print this week. How are inflation dynamics shifting the focus back towards FX markets, particularly the USD and emerging markets?
So this Friday we have the release of the PCE, and this is the Fed's preferred measure of inflation. It is expected to show a pickup on a yearly basis, and markets are currently discounting the September rate cut as we've been talking about, and even if this data point comes in hotter than expected, it would be very, very difficult for Powell to walk back from his Jackson Hole remarks. Now, I think that it will be really unprecedented from Powell to basically change his stance after opening doors. He still said that the Fed still data dependent, but after his remarks, it's mostly it's almost a certainty that a cut will come. So I think that markets will wait on even more data, and depending on the surprise that comes this Friday or not, we'll see reaction. But of course, any surprises on the outside could spark significant volatility, especially for the dollar. Even though the recent wave of like U.S. selling has started to wane, and I'd say that on top of that, I'd be remiss to not mention the AI narrative and the big week ahead for Nvidia, because the AI boom is real and is proving to be a powerful engine for productivity in the US. And frankly, it feels like the only engine of driving productivity right now. So what happens with Nvidia's earnings, which are due for this Wednesday after close, and market's reaction right after will have a real impact on the overall not only macro picture but the current market sentiment. So definitely, I'd say that the week on the more of the heavy data. Earnings and macro data will start tomorrow. I guess this Wednesday in the US.
Got it. All right. Well, that was a great breakdown. I think we've got some interesting data to look forward to coming up. Kevin, thanks for covering the basis for us from this very eventful week on the Fed side and the political side. And we'll be back to chat more in detail about what comes out of all these meetings coming up.
Definitely. Happy to be here, Alex. And thanks. Have a good week.